Welcome back. In an otherwise wobbly market, a whole host of consumer stocks, specifically from the consumer durable, slightly elite sort of space in the market, doing a lot better, which is Nykaa, Jubilant Foodworks and Titan on the back of their third quarter update. Now, seasonally, the third quarter is strong for consumer discretionary, names. And in that, these stand out for the following reasons. Let's start with Nykaa, the biggest gainer. It's up around 4% in today's trading session. The company reported its third quarter update. And remember, it was just last week where we had Anchit Nair join us and speak about the underlying trends in the beauty industry as well, where, a lot on the higher end is doing a lot better. The net revenue for the company likely to be higher than mid-20s. And at the same time, the beauty vertical has seen a growth acceleration versus previous quarters. This was also the quarter where they held their community building Nykaa Land event, along with a lot of the other Pink Friday sales, etc., that they did, do in terms of sales activations. So the growth this time around has been in mid-20s for the beauty vertical. If you take into account all the discounts, etc., that they've given, the gross merchandise value has actually been upwards of low 30s. So that's a positive. The part of the business which is not doing well is largely because of consumer sentiment, which is online fashion, which has seen subdued sentiment, because of which the fashion vertical growth has been limited to just about 20-odd%. The street likes the strength in the beauty business and the community, and as a result of which the stock up around 4%. Moving on to Jubilant Foodworks. Remember, a lot of pizzas were ordered this time around. The question is how much of that was dine-in and how much of that was delivery. Consolidated revenue for the company grew by about 56%. But for them, what will be more important and a teller of the underlying trends is a standalone revenue, because Consolidated includes the acquisition of DP Eurasia as well. Standalone as well, the internals are strong. 19% revenue growth is what the company's reported, 1,611 crores on the top line. But more importantly, the like-for-like growth in the Dominos stores has been around 12.5%, which is the highest that I've seen in the last 8 to 10 quarters at least. They've opened 16 new Dominos stores as well. And remember, if you notice over the last 6 to 8 quarters, the like-for-like growth in delivery has been much higher than dine-in. Dine-in had seen a bit of a deceleration. So whether that has been arrested or not is something we'll watch out for in the third quarter results when they are reported. We'll watch out for going forward the impact of beverage portfolio changes on their gross margins as well, because now they've moved away from Pepsi to Coca-Cola. Has that come at a better deal term? And the third thing is that growth in Popeyes is something that we'll watch out for. So these were things that both Hormaz and I could afford. That's Nykaa as well as some of the pizzas. Not so much for Nykaa, because Hormaz and I don't use some of those products, but those are ordered in our houses. The third one is Titan that we're talking about. Now there, a lot of gold was bought in the Diwali and festive season this time around. If you look at the overall performance of Titan, festive season and wedding season, along with the gold price rise, has meant that the overall revenue growth has been extremely strong for Titan this time around, 24% on a standalone basis. But if you look at the jewelry business, which is the mainstay of the company, there's a 26% growth out there. In that, it has been led by gold, and more specifically gold coins. 48% jump in gold coins is what the company has seen. And there has been a respectable growth of 21% in the studded business as well. But because gold has grown faster than studded, the studded ratio has come down. So that's something we will keep an eye out on. All the other segments of Titan, watches has grown at around 15%. Again, the street was working with a number of around 15 to 18% positive out there. Eye care as well has seen some sales activations out there. It's disappointing that the emerging business has grown just around 5%, because by nature of them being emerging, they have to grow a lot faster. CaratLane too, grown 25%, but a lot lower than the earlier CAGR of growth out there. So which is what we'll now track. One is the performance of other players, because last few quarters, Kalyan, Senco, all the others have grown faster than Titan on a lower base. Secondly, we'll watch out for margins, largely because of higher salience of gold, which is a lower margin business, and lower studded ratio as well. So has there been, some sort of margin correction that we've seen on Titan? And the third thing is the growth part for their emerging business, which is Taneira, and a resumption of growth in CaratLane is something that we'll be watching out for. So discretionary, doing fairly well, Hormaz.